Hello, I want to talk about how to prepare bank reconciliation statements. First, let's look at bank reconciliation statement. Let's try to get understanding. This is the verifications of all the entries in the bank statement with the bank book of the business. Bank reconciliation statement has to do with reconciling bank statements with your cash book. So let's look at bank reconciliation statement without adjusted cash book. You have bank balance as per cash book, $200,000. You get this figure from the cash book. The balance you have in the cash book as at when you are about to reconcile it with the bank. Unpresented checks. These are check draw, but not yet presented at the drawer's bank. $50,000. Credit transfer. These are money received, direct money received to your account. It could be that you are receiving it from your second bank or you are receiving it from somebody. You added $20,000. Dividends. These are all the dividends, direct dividend received into the bank account. All added together. You now have $18,000 added to $200,000. Then you now have a total amount of $218,000. You now less unclear check or unclear effects. A bank check that passed through the clearing system but not yet cleared. It appears on the debit side of the cash book. You less it. Bank charges. This is the money deducted from the entity's account by the bank itself to cover the cost of looking after the account. $10,000. Standing order. This is an order given to the bank to pay a fixed sum of money at a regular interval from one's bank account to a designated payee. This is like when you are paying for rent, pay for utility bill. One of the advantages you get for issuing a standing order to the bank is that it will save you from repeating drawing a check every time. It also saves you from stationery and postage. It also makes you to pay all your due as at when due. One of the disadvantages is that bank will take charges for such service. Dishonor check. This is check rejected by bank. Now, what are the reasons why bank will reject a check? One of such reasons is that if a check has irregular signature, when check is modulated, no date shown on the check, when you have insufficient fund in the account to meet the check, when check is stale, the debt of a drawer, no existing account, when the account is frozen, post-dated check, or when government put a stop order on the account. And these are some of the reasons why a check will be dishonored. So you have balance as per bank statements, $130,000. When you minus the $280,000 from $150,000, you have $130,000. This balance is expected to equal with your bank statements because that is the essence of reconciliation. Let's look at what can bring discrepancy between bank statement and cash book. And we are looking at a typical bank statement. You have the debit, you have the credit side, and it's in team formats. Okay, under the debit side, you have dishonor check, you have standing order, you have bank charges. Under the credit side, you have credit transfer, you have dividend. Remember to follow and contact us. Job Friday Guide on YouTube. We might consulting on Medium. We might consulting on Facebook and our email Also attend Oyima Accountancy Academy. It's an online teaching school. Also introduce somebody to us and you earn a bonus. Thank you for listening.